We think Tesla will lead the way in autonomous mobility here in the United States, which is expected to generate between $8 and $10 trillion in revenue globally by 2030. China is moving very quickly in this direction. I'm sure they will not let Tesla be in the lead there. It'll be another company, but in the United States, because transportation costs are so much higher here than are in China, the value of this is going to be much higher in the United States. Okay, right, so the 7 to 10, pay more, people will pay more, if you use Uber here in speed. That's all we do, there you go. Well, the prices have gone up dramatically here, as I'm sure they have in the rest of the world. So this need for an autonomous solution has increased. A lot of the bearers have a background in auto manufacturing, and they don't think that this company can ever make enough cars to justify the types of valuations that people are talking about. So those analysts are expert at the internal combustion engine. Yeah, they are not expert at electric software engineering. All of that's hardware engineering, or autonomous. So whether it's battery technology, artificial intelligence, software, that's where they've missed. Well, it's their directors of research have missed. They should, because I've been in organizations where if it looks like a car, then it goes to the auto analyst. Yeah, but if you have someone on the tech side advocating for, hey, wait a minute, this is really a tech company that's a bit of a wrestling match, as Cathie Wood's predictions for 2024 are causing a stir. One urgent query: fasten your seatbelts and get ready to go on an exciting journey through the corridors of innovation and disruption as we unpack Cathie Wood's Tesla 24 predictions. Every twist and turn in this electrifying saga holds significance, so buckle up and get ready to explore the highs and lows, triumphs and challenges shaping Tesla's trajectory, from strategic shifts in their product lineup to the competitive landscape of the global EV market. Come analyze the most recent findings with us. Examine Tesla's future and discover what's in store for the company in this video. Welcome to the Tesla Stock News page. Please click the like and subscribe buttons to get going. Experts are beginning to wonder if this titan of industry can really increase production to reach the enormous revenue target set, which suggests an eye-watering $8 to $10 trillion by 2030. This is concerning because the company's shares have dropped more than 30% since the year began due to a number of factors that are shifting the focus to the future of mobility. Talk about self-driving taxis takes precedence over drones, robotics, and even trucks. The astounding estimate of $8 to $10 trillion in worldwide revenue by 2030, given that transportation costs are higher in the United States than in other countries such as China. The country stands to gain a sizable portion of this market. However, China is gaining ground quickly in this area, so Tesla won't have an easy time holding on to its lead. Additionally, the growing cost of services like Uber indicate a growing demand for autonomous solutions. In the future, when the ratio of cars to parking spots drastically shifts from 5 to 1, think how much easier parking will be. The idea of cars running without drivers creates a more efficient business model that might release untold real estate value. Since Twitter is also heavily reliant on artificial intelligence, Elon Musk, the CEO of Tesla, has also drawn attention. It's possible that he will apply what he learns from Twitter and AI to the auto industry and vice versa. Various believe that Musk's increased focus will spur additional innovations in Tesla's journey, especially as the firm advances towards more efficient AI-driven production techniques. There are various theories about how this might affect Tesla. The truck for cyberspace looms large in the distance as Tesla's next battleground. Despite the wide range of perspectives on its performance, from pessimistic estimates to sales projections never seen before, it is evident that Tesla is still stirring things up and influencing conversations and expectations in the tech and mobility industries. Recently, Sam Corris, Director of Research for Autonomous Technology and Robotics, wrote an article emphasizing the Cybertruck's competitive edge and special characteristics while keeping cost in mind. Power and range of effectiveness. Let's break down Elon Musk's invention, which is expected to revolutionize the industry. Analysts are baffled as to whether the Cybertruck belongs in the smaller SUV or pickup truck category. However, like the Model S and Model 3 before it, the Cybertruck may carve out a niche market of its own. Its cutting-edge features and design have the potential to upend customer expectations. Think about this. The price of the Ford F-150 Lightning was recently, while still providing competitive performance and range. Now, let's talk about the form factor. Provocative, isn't that? It all comes down to grabbing consumers' attention. Now, let's move on to valuation. Sure, Tesla's market capitalization may seem enormous, but the possibilities for autonomous technology are virtually endless. Analysts frequently fail to consider the effect that autonomous mobility will have on margins, which would rise far beyond traditional car sales. Speaking about autonomy, some have expressed skepticism. Yet in light of current advancements in AI, the future appears more promising than ever. If autonomous travel becomes a reality, Tesla might be the first company to reach a $5 trillion market cap. Assume that the stock is now trading between $180 and $200, but that when autonomous mobility is added in 2027, the estimated base case increases to an astounding $2,000. That might translate into a growth rate of between 40% and 60% over the course of the following 7 years. Get your mini Cybertruck model now to up your collection game. Now, let's examine how we arrived at this prediction. As you can see, it all comes down to understanding these curves, or patterns of innovation and adoption. In 2015, the forecast estimated that there would be 250,000 electric vehicles by 2022. Fast forward to the present, and we're looking at a staggering 7.7 million. Exciting times indeed. Of course, Tesla remains Cathie Wood's ace in the market. But if you follow suit as an investor, you'll notice that, in light of Tesla's remarkable rise, it's not enough for Tesla bulls and those with a keen eye to find the next jewel in the stock market to sit on the sidelines. Your one-stop destination for the most recent information on Tesla is Seeking Alpha. Targets for Tesla stock price innovation from Tesla and everything Musk Elon. The greatest online source of news about Tesla is Seeking Alpha, which cuts through the mainstream media's negativity towards the company and gets right to the facts. Let's talk expertise. Traditional auto experts may doubt Tesla's capacity to meet demand, but they're forgetting a key detail. Check out the link in the description for a special price. Change is in the air on Wall Street. The conversation is shifting from just cars to embracing Tesla as a tech powerhouse. Despite covering Ford automakers, analysts are now focusing on the electric vehicle giant as its shares take a sharp nosedive, plunging over 30% since the year began. This is where Tesla shines, leaving the naysayers scratching their heads. Although, this is still relatively far from where change can still be made. The SL has been impacted by analyst downgrades, notably a recent negative recommendation from Wells Fargo, and rumors of a possible downturn in the market for electric vehicles are fueling the flames. But let's take a closer look. Tesla's fall from grace is discussed by Ross Gerber, CEO of Gerber Kawasaki Wealth and Investment Management. The original story that I think most investors bought into with Tesla didn't really include Elon and Twitter, and I think for a long time we all hoped that it really wouldn't affect Tesla and the demand for its products, but we all know that that has now happened, and the demand for Tesla products is obviously lower, and they've had to discount and do many things to hurt margins and returns, and ultimately, profits for Tesla. So you've got that problem, which is where's the bottom, where they don't advertise. And they don't do anything to create demand. But the CEO of the company every day goes out and hurts demand through his actions literally every day yesterday. It was dawned, is it simply a market correction, or are there deeper concerns lurking beneath the surface? Ross explained that it is unfortunately, as it's a bit of both, many investors bought into Tesla's story. Without factoring in Elon Musk's antics on Twitter, his actions have impacted demand, forcing the company to resort to discounts and other tactics that hurt margins and profits. Although Tesla was once hailed as a car company, it is now viewed as a tech juggernaut. However, with EV valuations cooling off, how can we accurately assess Tesla's worth? Despite the turbulence, Tesla's technological prowess remains undeniable. From battery technology to manufacturing efficiency, the company continues to push the boundaries of innovation. However, Tesla's fortunes aren't solely tied to cars or tech. The company's stock performance reflects this delicate balance between technological achievements and market sentiment. Even though Tesla continues to dazzle with its innovations, questions remain about the sustainability of its growth trajectory and its capacity to meet ambitious growth targets. As investors, analysts, and enthusiasts, we must remain vigilant and prepared to interpret signals and unearth the underlying truths propelling Tesla's narrative forward. Imagine if,